On the last trading session for Friday, gold spot printed a closing price little above $1,786 per ounce. The number is rounded and the market is closed. And on the last week, gold traded as low as $1,774 per ounce and as high as $1,876 per ounce. The numbers are rounded and the market is closed. Gold is trading in a bull trend. The general trend is a bull trend, and it's at the moment below all the daily simple moving averages. The RSI readings are bearish on the daily and weekly chart and moderate on the monthly chart. And gold shall find support on immediate at 1763, then 1745, then 1700. And gold shall find resistance at immediate 1800, then 1815, then 1850. That's all. Moving now to the calendar. On the economic calendar for the coming week and from the United States, we are waiting for the following economic headers to be released. The pending home sales, this is to be released on Monday, then the ISM manufacturing PMI on Tuesday, and we will have the non-farm payroll on Friday in addition to the unemployment rate. That's all. Moving now to the trading strategy. Hi again. In our last video, we expected that gold could break 1850 level and to continue sliding toward 1800. In fact, it was as exact as expected. Gold reached even below 1800, below the 200 days daily simple moving average, which I wasn't expecting to happen in a 1 week, being honest with you. And the catalyst behind this, the huge downside rotation, is the shift of the sentiment, because markets are so hopeful that the vaccine is going to return the life to what it was before the coronavirus pandemic. And surely they are ahead of themselves, and this is could be a very or really a great opportunity to buy gold at the cheap. We do expect gold in the coming year 2021 to rally big times, more than what we have seen in the last year. According to the most of the popular and reputable economists, this is going to be a double dip recession, which means the stock market is on the risk to see another round of a massive sell-off, maybe in the few coming months. And this sell-off going to be harder than the one that we have seen on March. And it's indeed will need the governments to interfere by stimulus and money printing and all what we have seen on the last year, which is going to be the catalyst for gold to rally on the coming year. For the now, gold usually on seasonal basis from November to mid-December, gold usually weak. And usually also, if you look at the chart, whenever gold closes on weekly and daily basis below the 200 days daily simple moving average, usually it will dip another 5 to 8% extra, which means there is a big chance, more than 60 to 70%, that we are going to see over the coming 2 weeks 1700 mark. So in my opinion, and also in addition to what we have read last week from Citibank and Goldman Sachs, they are expecting gold to hit about 2,500 in the coming year. I see 1,700 could be the bottom of the gold, and 19 could be the bottom for silver. If you can catch at these prices, I think it's a great buying opportunity. At the end of the day, the government have printed lots of money. There are so much money out there, even it's not in our pockets, but it's out there in the hand of the governments and banks. And this money, one way or another, is gonna reach and create some inflation, and the prices of everything almost are going to skyrocket, and gold is not an exception. That's all for this week. Thank you guys for watching. I'll see you next week in another video.